Hello, welcome to this overview of Tradie's charge out rate calculator. I'm Peter Towers, Managing Director of BIZTOOls. I hope you're having a wonderful day on Black Friday. Tradies need accounting assistance. I think they certainly do. In fact, all SMEs need accountants' assistance at this stage of a very difficult business cycle. Not just for the preparation of an annual set of accounts and an income tax return, which is also very important because they need to prepare that for the government. But do you ever get a big thank you for preparing someone's tax return? I didn't get many thank yous over the years. I got a lot of thank yous for business plans and for sorting out corporate governance, helping people to understand directors' duties. The business plans were the most successful ones, which obviously encompass budgets and cash flow forecasts. Nice bottles of wine from that sort of work. What do you get for tax return work? And I think this shows that your client knows that the tax return's being prepared because it's got to be lodged with the government. And if they don't do it, they'll get into trouble with the tax office. But the preparation of this other work that we're talking about is real accounting work to help your clients run better businesses. So tradies need financial advice throughout the year, not just for one or two times a year when you're talking to them about tax. And one of the key points of difference with a tradie is how they go about setting their charge out rates, which are connected to the dynamics of their business. And this is critical. How do your tradies set their charge out rates? I think that's an interesting question. Why don't you run a survey with your tradie clients? You send it out as part of a newsletter. We're looking to understand how you determine your charge out rates. Do you set a profit target at the beginning of the year? And do you then set your charge out rates to try and achieve that target? A profit target should be determined at the beginning of the year, and then a budget is implemented around it, looking at all the costs, the productivity percentage, the overheads, to see whether the business will generate its profit target. So how many tradie clients do you have? Some firms have a lot of tradie clients. How do they set their charge out rates? Assisting your clients to calculate realistic charge out rates is the start of offering a 52-week business enhancement system, which I believe is very important based on my professional experience as a senior partner of an accounting firm, chief financial officer and company secretary of a listed public company, and a business advisor on the COMET program, Commercialising Emerging Technology, for 12 years while we developed the BIZTOOls and also conducted that consultancy. I worked with quite a number of companies who were developing new technology, new innovation. They all needed money, so they wanted to get themselves into an investment-ready status. We helped train them. Now, one of the big problems in all those types of businesses was what were they going to charge for their invention? And it was the recovery of costs that a lot of them had not really thought through. So how many tradie clients do you have in your firm? A great endorsement for the charge out rate calculator that we have developed was made by Amanda Gascoigne, a well-known accounting industry mentor and coach. I love the BIZTOOls tradie charge out rate calculator, she said very enthusiastically in a joint webinar we presented 2 months ago. There are significant opportunities to assist tradie business operators to improve their business by proactively advising them on the calculation of charge out rates, Amanda said. So what's the key components of the tradie charge out rate calculator? It's the applicable labour on costs. I'm going to show you some labour on costs on our calculator, certainly, but shortly. But it's an area where a lot of people seem to miss out on. When I talk to tradies, or did you put in your overheads? Oh, what are they? Your labour on cost overheads. Obviously the salaries and wages being paid, but make sure you've got all of it. The working hours, the individual productivity percentage that's expected. I always shudder when someone tells me they're going to achieve 100% charge out rate for anyone. So you might have to guide your clients a bit on that. And the proof of the pudding, of course, will be after each month getting the actual productivity figures and saying to your client, well, you told me you'd get 98%, but look at this, it's only working out at 90%. And therefore we should go back and adjust the calculator again, because the charge out rates we've established are not going to be high enough for you to achieve your profit target. What's the individual productivity percentage and what's the overhead expenses for the business? What's the value of estimated purchases for clients during the year? A lot of tradies buy a whole stack of stuff, sometimes costs a lot of money, to go into the building that they're building, the home that they're building, or whatever they're doing on a vehicle. They're buying parts and new equipment and whatever. And they normally then charge that to the clients separately. And it probably takes the client 30, 45, maybe even 60 days or even longer, I suppose, to pay for that. Many of your tradie clients will mark that up, but in our system, we're asking them to establish a set percentage, 10%, 15%, or higher if they wish, or lower if they wish. And some, of course, they're not going to charge a markup. I think they're entitled to a markup because it's going to take someone's time to organise that. They're organising the payment to the suppliers and taking the commercial risk of that expenditure going onto their account or their credit card or whatever. What's the targeted profit for the year? And what's the projected income to be generated by each team member? And then at the end of it, we want to give a financial forecast estimate that's reconciling all this. There will be some variables because there's rounding off occurring in these sort of calculations. But it will give you an idea of what can be achieved. I got one client within ESS BIZTOOLS that when he came to me, he said he had 10 tradie clients, but he'd heard that from one of his colleagues that attended a Smith Inc. conference where I was the one of the keynote speakers and demonstrated the tradie charge out rate calculator, that we had such a device. So he became a subscriber and he's still a subscriber. He now tells me he's got 120 tradie clients. He's done no advertising, no marketing, no social media discussions. They've just built up because of discussions amongst tradies at Smoko and Friday afternoon drinks. And he said to them all that part of the deal was they then had to agree to have monthly or quarterly financial accounts because he wanted to measure their actual performance and see if the productivity percentages were coming in accordance with the budget. And if they weren't, he'd be suggesting to them they then produce a new projection on the revised percentages of productivity, and maybe some overhead costs have changed also, so that they got the opportunity of using different charge out rates. On that comment I just made, they'd be higher in the remainder of the financial year. What's gone's gone, and if they've already submitted quotations, well, they've probably lost the opportunity of changing that. But if there's been variations, or it's been too hot or too cold or whatever, too wet, and productivity percentages have not been able to achieve the original target, well, being pragmatic about it, you've got to change it and move on. So that's what he does. He charges $8,000 to $10,000 per firm, more than what they were paying for their taxation advice, which they still pay for. So he's now generated a nice $1 million plus revenue stream out of 120 tradie businesses. How many tradie businesses have you got? The 52-week business enhancement system is an opportunity for you to introduce a proper business system to tradie clients. Now, it's got a number of key aspects. A daily report. Now, that might be who was away today, what was the productivity percentage achieved today if the timesheets have been done daily, or what's the bank balance and what's the debtors figure and what bills have got to get paid this week. Might be the daily report. A lot of businesses, very big businesses, have been doing that type of reporting forever, long before computers. And then we've got the weekly report. Now, a weekly report can be very valuable for a lot of businesses. And in our system, we've got simplified templates to prepare weekly performance report and productivity reports. So the key data is available. You know what the labour costs were. You can put a percentage of your overhead costs into these calculations and calculate what the revenue generated based on the charge out percentages would be. So you could be giving a report to your client on Monday afternoon, Tuesday morning to say, well, that's how we think you went last week. But it might only be a report that looks at the productivity percentages, because that's the key thing that the owner manager can do something about if it's not in accordance with what was used in the calculations. But then at the end of the month, you can have a proper set of financial accounts. And if the tradie's got more than one operation, they might have a plant hire business on the side. Well, do a separate P&L for them, have the tradie business and whatever else. He might have a storage facility that he's operating or whatever, and treat them as separate entities so you can compare everything back to the budget and then do an update. And as I said, the report from that update report may be that you need to fine-tune the charge outs because there's been some variations in the productivity percentages being achieved. You make that work for your clients. So what we're going to get is the monthly accounts, the individual performance, and be able to review the assumptions that have been made. So I'm now going to take you to our website and pull up the charge out calculator so that you can have a look at it and decide whether you want to work it in your firm. So it's on the screen now. It's been prepared by ESS BIZTOOLS for Sparky Enterprises. So I'm probably thinking of an electrician. There's a set of instructions. You can go through and read at your leisure once you are a subscriber. And the first thing we need to calculate is labour on costs, because I find that a lot of people don't calculate on costs. They forget about long service leave, even though it builds up. And when it gets to that defining year, whether it's 8 years or 10 years or whatever, it's a very big sum of money. It'd be great if people were charging for it, putting into a separate bank account that no one can touch until someone gets to that retirement age, or not retirement age, but work period age that they're going to be paid. Because a lot of people haven't got it. So in the calculation of on costs, we've got in effect there are 36 categories for full-time employees, 36 categories, and the categories are A11 to A16, A21 to A2, and so on. And so 36 categories for part-time employees and 36 categories for casuals. No one's ever rang me and said they need more. I hope it's enough, because what we're trying to do is to get the identical components. So with the manager, he's on his own because he's working, getting 20 days annual leave, but he doesn't get the holiday pay loading, but and neither do the holiday pay loading. I'm on the wrong line. He doesn't get the holiday pay loading, but the other people do, 17.5%. Statutory holidays are the same. Personal cares, we've done that the same. But the manager's getting paid 15% of his income's going into superannuation. The foreman, office manager are getting 13%, but the general team are only getting 11.5%, the statutory amount. Payroll tax is the same, work care is the same. But then when training comes along, 5 days, 2 days, 4 days. So we're using these components here to say if you had 3 or 4 other groups of employees that had exactly that configuration, and they probably won't because we're paying super at 15%, you'd put them into that group. But if they're different, you've got 36. Well, you've got 6 main categories to play with. Probably a better way of putting it. And then the system calculates the number of working days in the year where you feed it in. They're going to work 52 for 5 days and for the year. The annual leave gets taken out, the statutory holidays, personal. So they're going to work 215 days in actual productivity, 218, 216. The system then calculates some of these, what the labour on costs are. There's no holiday pay for him, but there's a lot more super. So it ends up at 22.5%, 21.91, 20.4. And we can do the same thing then. We got some apprentices and their situations in there. And then we've got some part-time people, the labourers. So their situations are recorded. And then we have down here some casual cleaners, and they're getting the super, and there's a payroll tax cost, there's a work care cost, and the working hours they're working in the year is 1,300, and we're able to calculate that their labour on costs end up at 17.4%. Still a fair bit of money if you're not providing for it, isn't it? In your calculation of what your expenses are for the year. Now, all that information is then transferred to the, let's go back here, to the labour budget. We've used obviously the same reference numbers, so they're transferred across, so you can track who we're talking about. The manager, the system transfers this across. We've already told them, the system, there's only one of those people, and the salaries, you're telling it there's only one of them. There's $145,000 salary. The system does the calculations there for total gross salaries. The labour on cost is transferred out of the labour on cost figures, and the automatic calculations are then done. And the next decision is, what's the productivity percentage? So everyone's agreed that the manager will be able to do some time on the tools or in an income producing capacity, if I can put it that way, and that will be 30% of his hours. So he's going to generate 490 chargeable hours. Then we've got the other people as they come through. The foreman, they're getting paid 120,000. There's two of them. The on-cost figure that we had there before was 21.91%, so that's transferred across. That's the calculation. The calculation there is at 50% of their time. The foreman will be chargeable, so 1,657 hours for the two of them. The office manager was the next one, 100,000 payment. The on cost is the same, 21.91, but there's no expected productivity percentage in that his time is actually going to be charged to a customer. So there's no productivity there, and so on. So then they've got the separate calculations for the part-time employees, and then the separate calculations for the casual employees. And at the end of all that, we have the cost of the overheads, and look what that is, $161,000, and the cost of the rest of the labour. We then set the business productivity percentage is then calculated by the system. It's just a matter of taking the hours and doing the calculation. It's 44.5%. The return on investment, the owners agreed the business is worth 450,000. You've agreed that 20% rate of return would be good. So the targeted profit is now $90,000. The budgeted overhead expenses are the next. In your situation, I'd be recommending you go through and actually type in what those overhead expenses are, because you want to be able to compare back to the budget each month. But I've inserted the total figure. I've shortcut the exercise, $450,000. The budget and material markup's an interesting one. This client has said to us he thinks he'll buy $1 million worth of electrical gear, light fittings, fans, maybe air conditioning systems that are going to be installed. So it's going to hit his credit card. He's then got to raise an invoice. He's got to have someone go around and find all this gear, get the colours right, get everything right. I think it'll be a very difficult job, actually. and he decides he wants some 10% markup on that. So the system says, well, you're going to earn $100,000. The decision then is, are you going to use this markup to subsidise labour, charge out rates, or are you going to try to keep all of it or some of it as a super profit? Now, in this exercise, we've said that they'll use 100% in the calculation of the labour charge out rate. So obviously they're using this bit of money they make there to subsidise their labour charge out rates. But they could say only 50% there and 50% is going to be a super profit, or 100% is a super profit. Our system's built. They can have an allowance for write-downs, and we've factored in 5%, even though I hate write-downs. And the system then does a calculation to say, well, what's our labour got to be? Our total labour costs, including on costs, were 1.9 million. The return on investments calculated at 90,000. The overhead expenses are shown as 450,000. That's the amount of the markup incorporated in labour charge out rates. And we've got an allowance in write-downs. So the total labour to be recovered by the business is 2.45 million for the year. So you can sit down and explain all that to the client. The system then goes through and does some calculations, which you really don't need to bother with. It goes through and looks at what the total labour cost is, the hours worked, and does a base cost per hour calculation, multiplies it by the productivity hours and calculates a base cost chargeable hours. And then we then look at the overhead factor. The total labour to be recovered is 2.4 million. The base cost of labour hours, which I clicked over there, that was the figure down here, the 800 odd thousand. So the business overhead factor is a total of 2.7. I've just missed a. So the system then does a calculation of the labour charge out rate. So it's determined the charge out rate to be $248, and the productive hours is estimated at 490. So the manager will generate 121,000 and so on. So there's the totals coming through there. So we end up with 2,457,000. And then we do an exercise in the budgeted profitability. We've got the materials and labour that we've sold. So we've generated sales of 3.5 million. And those materials are the materials purchased for the customers, $1.1 million worth. We've got the allowance for write-offs, so we've taken that off, 3.4 million. We've got the cost of that external purchases. We've got the labour and labour on costs, take that off. We've got the gross profit, and that's a GP of 16%. The overhead expenses are 450,000. So our calculation is saying 95,000. Our target was 90,000. There's some rounding off occurred in there, and I'll have a better look at that later on. But that's the way the system works. So you can sit down with your client and say, well, okay, your target was to make 90,000. In fact, on this exercise, we're showing with the rounding off, there's a bit of that in the calculation of the charge out rates, of course. You, in fact, could earn $95,000 during the year. And that is the way that we make it work. There's a long service leave calculation included, which shows the long service leave based on whichever state your client's operating in. So let's now go further into this. The trades charge out rate calculator. All of the documentation mentioned is available within the trades charge out rate calculator developed by ESS BIZTOOLS. Now, the estimated fees I think you can generate by utilising this charge out rate calculator is $1,000 to $2,000 per client assignment. Now, it depends how many team members your client's got and how many meetings you have with the client to go through all this, but this is not a 5-minute job. It's giving you a tool that you can continually do calculations and you can revisit them. There's also the possibility that you could implement the 52-week business enhancement system when we have that within ESS BIZTOOLS. So you could subscribe for one of our complete product packages. The advanced product package has got the 52-week business enhancement system. And I think you could generate fees, a bit like our other subscribers doing, of $8,000 to $12,000 per annum per client. How many tradie clients have you got? So as part of our BizAid program by ESS BIZTOOLS, you can subscribe for the trades charge out rate calculator. You can pay monthly if you like, $33 per month. But our special offer that we have at present is that for $150 plus GST, so $165, you get the use of this package for 12 months, 24/7, that you can use with as many clients as you like. So you could start on that, get going, start earning some money and say to me, oh, geez, we now want some of the other packages, Peter, the 52-week system. And you receive a few other papers and articles which we've written on various matters as part of the deal. Because we will want you to join us with a full package of services that could be beneficial to a lot more of your clients. This is just giving you an idea of what's involved. So how many tradie clients have you got? How many of those would you expect to give you the nod that they'd like you to undertake this type of calculation? You could prepare your own video for them and send it out and say, this is what we can do for you. Do your own exercise. Do one up as a preliminary, knowing various facts and figures about that client's business. Then you can calculate what your rate of return will be on investing $150 to have access to this material for 12 months. So you're ready to take action. I hope you are. Please go to our website, www.essbiztools.com.au, click on packages and pricing, and then click on the individual product, which is obviously the tradies charge out rate calculator. And you can then complete the subscription order form to get started. If you need any more information, please send an email, peter@essbiztools.com.au, and we will respond. And if you need a complimentary Zoom meeting, I'm happy to do that, take you through and show you how this system really works. But I hope you've seen enough today to appreciate that it will be a great benefit to you in supplying real accounting services to your SME clients. Or you can telephone me, 0747241118. Thank you for your interest in our BizAid by ESS BIZTOOLS project, whereby we're aiming to offer our products at the lowest possible price so that you can then offer services that we believe will assist more and more SME clients to survive the current very difficult circumstances. I look forward to hearing from you. Stay safe. Have a great day. And we're getting close to Christmas, so have a very happy Christmas and New Year also. Thank you. Goodbye.